Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To open today's webinar, the Australian dollar mixed outlook has again continued to confuse traders with the price action attempting to take on that 80 cents handle. Did fail again, and from this morning the market has retreated from there. Overall, I do expect to see further weakness with the initial target holding towards 79.50-60 and reassess from there. Even though we have had a firm rebound from that level after printing a low of 54 last week, I still expect to see from a technical point the market to fail towards the top side around 35 to 60 and drop back towards that support level at 79.50 and reassess from there. The mixed price action for Euro on Friday has now given some concerns that the US dollar has failed to sustain its gains. What triggered the move last week was the US CPI upbeat number, which came in better than forecast at 4%. This week we have the FOMC meeting and the market will be looking towards any announcement from the Fed of an unwind of its 4.5 trillion balance sheet. But more importantly, the market will be keeping a very close watch on Fed Chairwoman Janet Yellen after the announcement to the press conference to see if there is any rate hike in the near future. Now, before the upbeat CPI, the market was around 30% factored in of a December rate hike. But now with the upbeat number coming in at 4.4% has given around a 55% chance of a rate hike. But what's concerning is the fact that the US dollar did not fail to sustain its gains. Therefore, could see some increased movement to the upside for Euro and look towards 119.55 to 119.80-90 and reassess from there, with any pullback likely to find support around 118.80 to 90, with the uptrend now coming in at 117.95.05. The dollar yen case may have caught the market a little bit off guard over the last trading session, since the market rebounded from the 106.75 level. It has not looked back, and this very strong knee-jerk reaction on Friday. So with the markets looking focused on the FOMC rate decision, it will question whether the rally can now sustain above the region of 111 and look towards 111.75.85. From a technical point, it does have merits to go there. If the market is caught short, and we have opened very strong this morning, then we could see this rally up towards this level before turning around, with support coming in now at 110.60 to 109.85. The British pound ended as the strongest major currency on Friday after last week's upbeat CPI now heightens a hawkish Bank of England. After its press announcement, the market is now viewing a potential November rate hike from the Bank of England. Over the weekend, the British newspaper The Telegraph said Boris Johnson will use a showdown meeting with Theresa May, the Prime Minister, to get some reassurance that she will not agree to make any substantial payments to the EU after Brexit. The Foreign Secretary is concerned about the reports that the PM may be preparing to announce that she will carry on paying up to £10 billion per year to the EU during the transaction period, which could be as long as 3 years. So with the dynamic rally reaching its target of 136, now looks towards the next level of 136.80 to 137.55.75 and reassess from there, with the support coming in at 134.90 and firmer at 134.35. Well, it would seem that the gold price action is wearing thin to the downside. Although seen as a safe haven demand, it would seem that traders this time around may not be taking Kim Jong-un as seriously, purely for the fact is the market fell from 1334 down towards this level this morning around 1,314. Holding at the support, it is concerned that we could see further weakness towards 08 and towards 99. This would bring the technical outlook to a slightly better position than being overbought, so therefore it does warrant the move down. Along with the trend breaking at 18, does look for further weakness with any advances for the day, looking towards 24 to 32 as a cap. The silver outlook also breaking down with the trend taking out at 60. Now looks towards a target of $17.20 and reassess from there. With any advances, should find a cap now at $17.90. And to wrap up with oil, the market reached its target of $50.40 and now looks to an extension to $52 before turning around. For those that are long, you should expect to see profit taken from there, so it would be an ideal position to get out of longs from there and reassess there. Reason you can see back in May the market did fail, so we could be looking at that similar pattern with a turnaround looking towards $49.50 as a potential base. So that wraps up my daily video. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you have a wonderful start to the new week.